Good morning, everyone.
Hi, Carolyn. How are you?
Good. How are you, Aaron?
Good. I'm excited to be here with everyone in the Moomoo family. Yeah, we've got a great webinar planned out for today.
Yeah, super excited about sharing with you some of the tips we have seen that really help stock investors to grow and to really quickly shorten their cycle in picking the right stocks to invest. So without further ado, let's dive right in. First, as always, with all financial products, as you guys might have seen, we have to make sure you are fully aware that today's educational webinar is really for information and educational purposes. It is not any form of investment advice or recommendation. So with that out of the way, let's dive right in. Sorry, just 1 second. Don't know why. There. First and foremost, we would love to introduce ourselves to you briefly. My name is Carolyn Bao. I currently run marketing for Moomoo Inc. in the US. And in my prior role, I have always led marketing leadership roles with various tech companies. But when I reflect back, it's very interesting. A good almost 50%, if not 30% of my time had always been in fintech or financial products such as Visa and QuickBooks, and now with Moomoo, helping more investors to learn the necessary skills and become a better stock investor. On a personal note, myself, I also have been buying and trading stocks for about 20 years. And I have dabbled into other forms of investments such as real estate and angel investments. So I had some personal learnings along the way as well that they'll be weaved in throughout some of the educational webinars, reflecting as an investor myself. Aaron, up to you.
Yeah, so excuse me. My name is Aaron Bree. I'm a content producer and trader here at Benzinga. So if you're unfamiliar with what Benzinga is, we are one of the fastest growing financial news outlets in the country. So if you trade stocks on a place like Moomoo, Robinhood, or any brokerage, you may see our articles there. And yeah, I've been with Benzinga for about a year. So I write articles. I help host live shows. I'm a producer for a couple podcasts. And yeah, I basically cover everything in the stock market, from different stocks, why they're moving, even in the crypto markets. And on a personal level, I've been picking stocks and investing since I was 16 years old. So I have about 9 years of experience doing that. Kind of my claim to fame back then, 2013, 2014, was I took some money that I had an investment account from when I was a kid for my bar mitzvah. And it was in this diversified portfolio in these ETFs. And I said, you know what? I want to sell all that and I want to put it into these three stocks. And it was Tesla, Apple, and Netflix. So going back to 2013, 2014, that portfolio performed very strongly. And because I did so well, or maybe got a little lucky in those first three stock picks, I've been hooked to it ever since.
Yeah, wow. I wish I knew you back then and would have followed your stock picking strategy. That was really awesome.
I know I laid out a whole thing because, my parents and the person who was running the investment account said, okay, this is a lot riskier than what we had. And I said, you know what? I'm so young. I'm willing to take on that risk. And we'll talk about that more, kind of determining what your goals are with investing to help you decide how risky versus how safe you want to be. But yeah, I remember them telling, my investment guy back then even was like, Apple's already gone up this much. And I was like, I gave him my reasoning for why I thought at the time Apple was still going to be a good play, why I thought Netflix was going to be a good play, why I thought Tesla was going to be a good play. And I guess my reasons were good enough that they allowed me to do that and ended up working out very well in my favor.
Wonderful. All right. So yeah, as you guys can see, Benzinga and Moomoo, we're super excited collaborating with picking the brains, not just within Aaron and myself, which, as you have heard, we both have had a lot of stories to share and some knowledge. But more importantly, also wanted to recognize Moomoo has an entire army of experts and content producers that was behind many of the educational content, and this webinar is one of them. So I want to briefly recognizing that. And Benzinga, as our key strategic partner, has been one of the fastest growing stock trading and stock investing content publishers. So we're really grateful that we are able to bring this to you. I'm very much thankful for you all who dialed in. We are going to share with you some of the tips we have found helpful with many other stock traders within the Moomoo community. So today's agenda is going to be a quick overview on how someone can really shorten their stock picking cycle. What is that 1, 2, 3 step? And we're going to kind of work with you to kind of reflect quickly on your investment goals. Everything starts with setting a specific goal. And we're going to share with you 3 key steps, as I mentioned, about this 1, 2, 3 steps. And we're going to wrap up with the next steps. One quick call out is during this webinar today, we're going to launch a couple of polls. So please do join us in the polls. We will be giving out a lot of cool merchandise. As you see, a lot of the stock influencers, they all have loved seeing our merchandise and featured in their videos. At the same time, we're going to have you, we're also going to inform you on future webinar. So very first, how do you currently discover new stocks to invest in? I'd love to hear. Let's see what our audience currently do to analyze and pick stocks. Aaron, as our audiences are casting their votes, I know a lot of the folks also do research of stocks on Benzinga. Have you seen any trends and patterns in terms of stock picking recently?
Yeah, so over the last year and a half, really since the COVID-19 pandemic, we've seen a kind of shift where now it's very common for a lot of people to be introduced to a stock via social media, whether that's Twitter, Reddit, even TikTok. People will see a stock there for the first time. And honestly, there's nothing wrong with that. It's actually a very great way, you know, if you ingrain yourself on Twitter and follow people that are actively trading and following the markets, they may have some great suggestions and ideas when it comes to stocks. What I would implore everyone to do is that if you are introduced to a stock this way, don't just take whatever someone is saying online for the truth, or you know, don't take them at their word. I would go out and then do my own research. So for example, if I see someone tweeting about you know, Tesla per se, and say I know nothing about Tesla or Tesla's stock, I wouldn't want to go out and just buy Tesla because I saw someone tweeting about it. I would want to go then do my own research and determine, okay, do I think this is a good investment for myself?
Yeah, definitely. Buying stocks is really about putting your hard-earned money into something that may give you the return you hope for, but at the same time, there's opportunity cost. When your money is parked in certain stock, it cannot produce returns in other ways. So it is very prudent to make sure you do your own research. That's something, by the way, Moomoo and Moomoo's community really believes in. We have found that Moomoo really attracts folks who don't just want to sort of have the money be invested by others, but really want to take control of their financial future by equipping ourselves with better knowledge and better data. And we're going to show you just in a sec on how you can really mine that information really quickly using Moomoo. We saw that about 68% had participated in our poll, and we are seeing trends and patterns in how folks are currently doing their stock picking. So if you all want to maybe take another second, we'd be more than happy to see where everybody's sort of current knowledge level stands in terms of stock picking. It's interesting. There are a lot of, we mentioned about Moomoo's community believes in taking control of our financial future. I do see a good amount of us, about a quarter, are casting a vote about doing their own analysis. With that, I'll give it one more second. All right, we are going to end the poll right now. And let's take a look at our poll results. You'll see it's about a quarter of us do our own analysis using a number of resources. a good number of us also follow recommendations by influencers in social media. That's very interesting. We also see that leading financial sites such as Benzinga, CNBC, Bloomberg also make an impact on us. But Aaron, this is very interesting. 17% of our audience today do not quite know how to pick stocks. That makes it more worthwhile for us to really go through the content today.
Yeah, and I mean, in today's world, there's such a great number of different places you can go, right? I just mentioned, we've seen this trend develop over the past year and a half of more and more stock ideas being shared on social media. There are even specific social media platforms you can go to find stocks, like StockTwits. So for those of you out there that do not know where to find stocks or how to pick stocks, you're in the right place, because we are going to get to that today. So should we move on to the next slide, Carolyn?
Definitely. So one of the first things we have mentioned is really know who you are and what your investment goals are. It's kind of a, as we begin running, as an example, perhaps running, it sounds intimidating, but if you know your goals, either you are doing sprint running today or you are training for a half marathon, that requires very different kind of prep and strategy. So we outlined 3 main investment goals that we have seen from the community. Sometimes when we invest stocks, it's because you would like to preserve your wealth. But
Yeah, and
some other, sorry, go ahead.
Oh, I was just gonna say, yeah, like if say you're cash tight and you cannot afford to be losing the capital in the investment, then this top one, to preserve wealth, may be for you. You may want to be a little bit more conservative, and that would be your number one goal shown here. However, if you happen to have, a pot of money that is not your lifeline money, you don't need that money to pay rent, you don't need it for food, and you can take on some more risk, then some of these other goals may be a little bit more up your alley. So you may be able to take on a little bit more of an emphasis on the growth outlook of a stock, as opposed to something that may be a little bit safer.
Yeah, absolutely. But that, by the way, also determines, another dimension as you think about this is how quickly do you need this money to be cashed out? If this money is needed for, within a year, it's more or less considered as a short-term need, versus if the money is, for instance, in your Roth IRA or other longer-term capital, you may not necessarily need to cash out. And that actually also will influence how you pick stocks, putting your money into certain stocks and an investment time horizon. So let's take a look at that. Now that we know our goals, keep that goal in mind. And we have mentioned about the overviews. What is the 1, 2, 3 step? The 1, 2, 3 step that we have laid out here really is about, if you imagine sort of sifting through as a funnel, you may start with the 8,000 stocks, 8,000 plus stocks listed in all the stock indices. But at the same time, you may not need to, be worried about having to pick out of the 8,000 right off the bat. So that very first step is to help you narrow down what are some key sectors, key stocks that you may want to put into your watch list. Then the second is, within the stocks that you have put on your watch list, how do we quickly identify the sort of lemons versus, the rest of the good ones, so you don't have to park your money with the lemons. The last one is, when things become almost relatively similar, let's imagine it's sort of like, a parent of twins. How do you tell the twins apart? And that is how our third step is going to be, is how you compare and finalize your picks. So let's first take a look at the very first step, which is, how do you find stocks that match your investment goals? This is a way we have found helpful, is to think of this as a stock picking triad. What does that mean? So it is sort of a 3-leg stool where you leverage 3 features within the Moomoo app to help you quickly narrow down your target list. What is this 3-leg triad? The first one is called heat map. Heat map is, as shown in the middle screen, heat map shows you what sectors are hot. And hot, as you know, in stock trading is green. Anything green shows the percentage of growth in that sector. And at the same time, you can also, as we mentioned earlier, depending on your investment goals, that time horizon should change depending on how you are evaluating these stocks. So by clicking on the filter, again, looking in the middle panel, there is a sign that says filter. If you click on the filter, you'll be able to be shown with a menu of choices of, hey, I want to look at intraday. I want to look at five minute or 200 days, 250 days, etc. To really evaluate and judge what I think is a hot sector. And Aaron, I know there are some hot sectors these days, right?
Yeah, I mean, we've seen, again, especially since the COVID-19 pandemic. So for anyone that's newer to stock trading, essentially what happened was about 2 years ago, when the COVID-19 pandemic first became really evident that it was going to go across the world, the stock market essentially crashed in February and March of 2020. And then that was followed by a very rapid recovery. And in that, some sectors emerged as winners. And as you can imagine, because of the pandemic, certain sectors like telecommunications, so you had stocks like Zoom, DocuSign, Teladoc, that did very, very well. Again, EVs, electric vehicles. So with Tesla, a lot of those stocks did very well in that recovery, more so than other sectors. And one of the pro tips that I have is you don't want to just identify the sector. A lot of times it can be easy to see which sectors are showing strength. You want to go within those sectors and find the stocks that are showing the most strength. So even for, take example, the EV marketplace, the EV industry, you have certain stocks that have done amazing and then some that have not done so great. So just because you picked a stock in the right industry does not mean you necessarily picked the best stock in that industry.
Yeah, totally. That's so true. That takes us to the next step. So our next step is, now that you have picked a sector, let's imagine you have picked a sector, you still need to know which stock you want to pick as a winner. This is where some of the institutional investors actually become a helpful reference point. With that, I'd be curious about what our audiences are currently, who out of the maybe famous institutional investors, our audience is currently following. So I'd love to share our next poll. Sorry, second. Oh, I'm so sorry. I need to do. I need to give me 1 second. I'd love to see.
Yeah, and then again, going back to the heat maps real quick, one of the best ways to find which stocks are showing strength in that industry is to just see the price action, right? If I'm looking at all the EV stocks and I see Tesla is up 5%, but NIO is only up 3%, then I know investors are going out to buy Tesla more. So that's showing me that Tesla has strength in that scenario versus NIO.
Yeah, and also good stocks seems to also not, they're not always good stocks. Again, back to that sort of runners analogy, a good runner that may have won the Olympics gold medal last, 4 years ago may or may not be as good this year. And that is something to watch out for. Really, that ties back to your investment time horizon needs, right? If you can sit out, as we all have heard, Buffett said, find a good company, buy them at cheap, and give it time. But that really depends on if you need that money in a year, half a year, or 20 years, and that will be all very different. As our audience is casting their votes, I'm seeing Warren Buffett still holds a very decent spot. And we do see some of the other ones. I'll just call out briefly for, maybe you may or may not know them, but Soros Capital Management is the one that George Soros runs. He became really famous in 1998, particularly as he was betting against the trend, and obviously profited huge in the 1998. I believe the economic crash, and he was betting against the trend back then. He was made famous through that event. Bridgewater Associates is run by Ray Dalio, who has published several popular books on his philosophy and in investing and in running a business, etc. T. Rowe Price actually runs a lot of the retirement funds and ETF and other things. So they're also a very reputable, long-term running, a longer established institutional investor. Shall we take a look at our audience's poll?
Let's do it.
Yeah, let's do it. There we go. Buffett still holds a really strong spot. About a quarter of us.
And I'd be curious, for those of you that answered others, throw in the chat who those other institutional investors are. I imagine for a lot of people, Cathie Wood has become very popular, of course, of ARK Investments over the last year and a half. There are a lot of institutional investors out there, and a lot of times people will kind of have a favorite, right? I was always a Warren Buffett guy growing up, but as I've gotten older, I've become more growth and tech oriented, whereas Warren Buffett's more value oriented. So, seeing Cathie Wood in the chat, Charles Payne from Fox Business. Keep letting us know in the chat which institutional investors you guys are learning from.
Yeah, wonderful. And I do see earlier we had seen about 11% of you all pick stocks mainly just within your own industry. We hope that now that there is a quick shortcut to find out fast rising sectors, you can expand your sector choices and know this in the institutional investors. The reason part of the reason why we want to know how you follow them and who you follow is actually we want to show you something as a shortcut to all of these investors, is that we all know these are the pros, they do this for a living. Why don't we, let's say, come back to that EV sector as an example. We think EV is hot. Within EV, whom do we pick? So I would go to, this is the very first screenshot is a Moomoo app. If you go to the Moomoo app and you use the very top menu that says watch lists, market, and explore, go ahead and click on explore. You will be taken to this landing page where you will see, scroll down just a bit, you will see institutional tracking. That's basically your entry point into about 100 plus different institutional investors that Moomoo app tracks based on their quarterly disclosure report they have to file with SEC. So imagine you had to sift through all of those 10 Qs and you'd be like, yeah, I'll copy Warren Buffett's idea that he's bought this, or I want to copy Cathie Wood. It's actually harder to pin down Cathie's choices because she has so many ETFs, but they're actually all tracked in this one page. You can see once you click into any of them, one of the examples we have here is if you click on the Vanguard group, you will see their top buys, their top holdings, and the position by percentage. For instance, we mentioned about EV. Lucid is actually constitutes about 2.16% of the holding by the Vanguard group. This is kind of useful. If I knew, and I do, I know, so I would go ahead and click on that stock ticker LCID, and you can already quickly just add that to your watch list. So that's kind of a 1-2 step to narrow down your sector, identify one of those, leading stocks within that sector. If you just copy the homework, which is what I would really love if I were to rewind the time back as a student.
Yeah,
right?
And this is great that this is all available within the app because it can be very cumbersome and annoying to have to go from your brokerage to another website to get the information you're looking for. So it makes it a lot more seamless and easy as a trader and investor to have all this information available to you in one app.
Yeah, totally. That was the design thinking. Another idea to identify what stocks are hot is, as you had mentioned, Aaron, we used to believe just those institutional investors have sort of the more privileged data access, more knowledge. but increasingly we know there are folks in the community who do really good job at picking stocks as well. And many of you guys mentioned earlier, you are getting recommendations from, external. Well, I call external because this is from the Moomoo perspective. You are getting advice and recommendations from Wall Street Bets and Discord servers. What if one app within Moomoo, you can also get ideas from other investors? This is where you can find portfolios. So when you hit on Explore and you click into portfolios from the investment tools section, you'll see a list of portfolios that have been put together by other investors within Moomoo. These are, and you can, by the way, you can also rank, sort, and filter them depending on daily return, monthly return, or total returns. Within each of them, here is a guy at Gus Stocks. So if I think his portfolio seems to be performing really well, I'd be intrigued. I can see for free, obviously, very easy. I click into his portfolio. I see, wow, he also has Lucid. This is almost kind of cool. I just thought I wanted to invest into EV. I heard a lot about Tesla. The entry point, let's just say Tesla's entry point of, the price point of 1,000 is too much. I really want to pick a winner. And I see not only Vanguard holds Lucid, Gus Stocks is also using Lucid. This is an interesting pattern. Perhaps I would be comfortable that, hey, I put Lucid into my watch list. I'll start to monitor how the stock does. And this is a really quick click. And there's some, I kind of think of portfolio almost akin to fantasy sports, that you pick your players and you'll see who really comes out ahead. And that's what portfolio kind of does. And all the data is real-time updated depending on the market feedback. Awesome. With that, let's take another look. We have said this is a triad. So we've covered up the triad. Let's say we have found a few stocks that expanded our original stock picking kind of pool. Now it's the fun time to say, how do we avoid getting into a lemon? Because it's as if we go down, the supermarket trying to pick a watermelon. I was taught early on, there are techniques. You knock on them, you look at the patterns, etc. In stocks, what are those techniques? We all know there are specific metrics you should be using, and we're going to cover top 3. So it helps you to identify what are some key indicators that are key to a fundamental analysis. In terms of those, we'd love to know if you had any specific specific indicators in mind. For this, we'd love to hear. Just go ahead and put your ideas into the chat box, and let us know what are some indicators that you currently use or are important when it comes to fundamental analysis. I'd love to see how our community is currently using. This is a chat-based picking. Chat-based poll. We see 200 moving average, PE ratio, EPS growth in the next 5 years, faves only, price over sales, institution, that's right, follow where the sort of the market movers are doing.
Yeah, and this is one of those things that there's oftentimes not one single indicator that's going to be, that you're going to trade off of all the time. It's just about finding a system and finding out some of these metrics and some of these numbers, how to use them in your trading, and finding your system that really works best for you.
That's right. What are those though? There are a few that are useful, and we wanted to call your attention to 3 primarily. The very first one is earnings per sale. So earnings per share. So earnings per share, EPS, this is being mentioned a lot. The way how you can think about earnings per share is net income minus preferred dividends. It basically is to say, I have earned, let's say $100, and I have promised whoever holds my stock to earn, let's say, a 1% of dividend. So I need to make sure we deduct that $1 off. That gives us $99. at the end of the period, we may have about 10 shares outstanding. Therefore, $99 divided by 10 shares, it's $9.9. That's my EPS. And the next one that's really useful to think about is return on equity. What does that mean? Return on equity looks at not just this period, how we did in terms of net income, but it actually also looks at the company as a whole. The company as a whole, as we know from a balance sheet perspective, balance sheet basically is it all said and done. At the end of the year, how much of an equity does the firm have? It's your total equity minus liability. That would be your equity as the denominator, and you use the net income divide by that. That gives you an idea for how well this business as a whole can produce extra income. And the last one, as some of you guys put in the chat box, institutional holdings. It's another way to kind of take a look at, I think this is really good, but did everybody else in the market, are there more folks in the market with more money putting into this stock? And that's a pretty good sign that there's stronger confidence in this stock. So with that, let's take a look at where you find this information. Where you can find this information, roughly, I almost say there could be maybe 3 ways. How's that? The first way is you can always get it for free in the 10K reports by every public company in the SEC website. It is available. Everybody uses it. You can download the entire report, but it's kind of a painstaking because you have to go through all of them just to kind of put together year-over-year trend. Another way is you can still use a lot of the publicly available websites, such as Yahoo Finance, such as other stock tracking websites. It is available as well. But the third one, obviously, we would be really glad that if you want to check it out, is putting you as a CFO, in the sort of seat of a CFO and see, I would love to see earnings per share, not only at the end of the period, but also how it has been trending for certain stocks. That will help you to quickly develop an idea for, is this business doing better over time? So there are 2 examples we laid out here. NVIDIA and Tesla both have been really hot stocks, especially in the past couple of years. And if that's the case, do their actual earnings per share prove that point? Within the boxes, you can see, yes, they do. And this is a very well visualized chart. It is laid out in such a way for all the stocks, in fact, in the US market. Within the Moomoo app, the way how you can access that is by, earlier we mentioned any of the stock tickers that you want to add to your watch list. Every time you open the Moomoo app, you will have them in your watch list, and you can quickly click on any of the quotes to then use one of the top menus, analysis, options, and financial. And so you click on financial to come to this page, and you can see how earnings per share is tracking. In fact, we have seen some industry analysis show from this stats is very interesting, Aaron. From 1952 to 2001, 3 out of the 4 stocks in the 600 best performing stocks, they all have increased average more than 70% than all of the other stocks. So this is, if we're saying pick a winner that beats the market, this seems to be a really good indicator.
Yeah, EPS can be a great way. And there's an interesting story, actually, that was from about a year ago. So last April, a story came out about a single deli shop in New Jersey. And the deli shop was publicly traded. It was on the OTC markets, which is over the counter, so typically smaller stocks. And the stock for this one single deli shop had grown to be more than $100 million market cap stock on the OTC. Now, after the story came out about it, the OTC markets have since delisted the stock. But if you were looking for stocks and this one came across your radar, which was called Hometown International, if you would have looked at the EPS, because how it's calculated is you can look at the company's revenue divided by the amount of shares outstanding, shares available, you would have seen that this company did not have a very strong EPS. that it wasn't making that much money compared to the amount of shares out there in the world on the market. So again, that's just an example of kind of it's a very interesting story. You guys should look it up if you haven't ever heard of it. Hometown Deli, the stock. But if you were looking at that stock to buy it and you looked at the EPS, you would have seen, hey, maybe this isn't a great investment, and you would have turned out to be right that this company was way overvalued in the market. So I would always implore people when they're looking at stocks, look at the EPS. We'll get into more what you want to see on the financial side in the next couple of slides. But EPS is a great parameter for figuring out, is this company growing or is it not?
Right. Yeah, that story was quite incredible. It just tells you how important it is to do our own homework.
Exactly. Yeah. And that's the thing. If you could have seen this stock and if you would have done your own homework, you would have been ahead of the curve of knowing that, hey, this isn't a great investment.
Right. The next one that's also useful to think about is, from a pro tip standpoint, and Aaron, you touched briefly on some of that. We had mentioned, reflect a little bit back on the investment goals. We mentioned if your investment goals are short-term versus long-term, it may be different. Let's say if your investment goal currently is a little bit more short-term, looking at the quarter over quarter growth is a great way to see whether a stock is growing. But at the same time, don't forget about year over year analysis, because quarter over quarter, sometimes it's almost like, back to the runner's analogy, you can sprint for 100 meters, 200 meters, but the best runners as a long distance runner, they don't just go that fast for like the 26 miles, right? If you are trying to pick a winner, you want to know that they also do okay and actually well, on a longer time horizon.
Yep.
The
And
other
so,
thing is looking at the forecast, right?
yeah, 100%. So these are all great pro tips here, using higher parameters for a percentage increase in earnings per share in a bull market. So in a bull market, you really want to find the ones like that we looked at on the past slide with Tesla and Nvidia that had a really great EPS growth quarter over quarter. You want to look ahead to forecasted earnings per share over the next 1 to 2 quarters, because in the stock market, it's often for investors not what the company has done, in the past year or so or in previous quarters. It is what is the company going to do. So that's why it's very important for when a company reports earnings, which is of course where you get the earnings per share number from, that company will also report guidance, which is the guidance is what they're expecting going forward. The earnings per share is what happened in the past. So you really want to be looking ahead for what's coming for most of these companies for the next 1 to 2 quarters. Because a great timely example is Netflix. Netflix reported earnings last night and the stock is down 20% today. Even though the company did pretty well the previous 2 quarters, the stock is down because investors are worried about the company's growth slowing in the upcoming 1 to 2 quarters. So I would always implore people to look at the forecasted EPS. And then what you're really looking for great growth in stocks is accelerating quarterly earnings. You want to see that quarterly earnings growing quarter over quarter, year over year. And if you find that, then you've probably found a good stock. Not every time, but most of the time.
Right. Those are really great ideas. So when we have managed it, the other thing is the sort of level up, just to remind everybody, if we are saying you put your money in one stock, that is usually a little bit risky. And this is where the portfolio idea comes in. But even a consolidated portfolio of just about 4 to 10 stocks is considered as somewhat of a smaller portfolio. Therefore, quarterly earnings are probably not sufficient. You want to really expand just a little bit longer in terms of this idea for, let's make sure we pick a solid stock, not that home deli sandwich shop.
Yeah, and I did just see a reminder in the chat that the webinar will automatically shut down in 7 minutes, so we may have to hustle through these next slides, but we've got some more great pro tips coming up right now.
That's right. Return on equity is one we have mentioned. Again, you can find it in the financials page. And again, you will see return on equity. We have mentioned about why it is useful. It ultimately kind of shows you how well this management team is able to run the business. So return on equity is a thing you should watch out for. go ahead and head over to financials to look for that. The next one is institutional holdings. We have mentioned it is important if other folks, the BlackRock, the Vanguard group, they're going in and out of certain stocks is a sign that maybe you want to pay attention to. This is available not under financials anymore, but still within the quote page. It's called analysis. If you go into analysis and just scroll up and down, you'll find the institutional holdings and the trend of who is holding, coming in and more, how much is percentage owned by the institutions, and how that's trending over time. So we want to make sure that you are aware this is available at your fingertips. I know a lot of folks chatted about PE ratio. We want to probably just quickly touch on why we didn't say PE as part of the sort of top 3 metrics.
Yeah, I mean, PE can be very misleading for investors a lot of times because just because a stock is showing a certain PE that may look low does not mean that the stock is necessarily undervalued and going to go up. And conversely, just because a PE is high doesn't mean that stock is overpriced and won't continue to go up. So we'll touch on PE real quick and why it may be a little bit misleading, only if you're using PE as your only indicator.
Right. Yes. And that's very interesting because this is why when I first found out about a tool that helps you to compare different stocks, I was really excited because if we just look at PE, Tesla would be, out of our normal mind, we probably should never buy Tesla because PE was out of the whack. And the same thing goes for Amazon probably 5 years ago. But PE really just tells one part of the story. And it's important to really compare different stocks across more dimensions. And that, by the way, is in fact why we would love for you to also know how to leverage a tool that allows you to compare several stocks all at once. And this almost reminds me of the old days when we were buying, let's say, high definition TV. Or smart TV, this is a tool, it's called Stock Compare. Let's imagine you were in NVIDIA stock quote page. And in the stock quote page, if you just scroll in the financials, if you scroll a little bit, you'll see an icon that says Stock Compare. It'll launch this nice widget. It allows you to enter several other stocks that are having very similar business model as the stock you're trying to assess. Let's say NVIDIA is our target stock. Then who else is in the same sector as NVIDIA? This may be Intel, Qualcomm, AMD, etc. Let's put them all side by side, and you can see earnings per share quickly. They all have this nicely laid out bar chart for you to see. On the other hand, you could also then take a closer look at EPS growth, as we mentioned earlier. These are, that really helps you to kind of look beyond the PE ratio as a single dimensional data for you to assess. In this case, NVIDIA versus Qualcomm, I'd love to know what our audience thinks. You would pick NVIDIA or QCM, given the data we show. All right, feel free to throw your answers in the chat box. We would love to show you the Moomoo live demo. We are a little bit tight on time, but we can still go into this real quick. So I'm going to have this. Give me 1 second.
Yeah, and we're seeing some great questions in the chat, and there's also the Q&A feature. So if you have any questions, throw them in either the Q&A feature is the easiest place to have them answered. But yeah, some great insights and questions being shared in the chat as well.
Yeah. I need to make one of our apps as a host. That way we can That way we can do the live demo. In the same time, feel free to raise any future questions. One specific thing we'd love to know is, what are some other stock trading topics you would love to learn, you would love to better understand? So feel free to raise your questions. For us to make this work, we need to make sure the app itself is working. And I apologize, I am not able to make this work. Not right now. Luckily, we were able to show you majority of the of what we have pre-created within the screenshots. In our Moomoo app, if you didn't have it, go ahead and download it. In the Moomoo app, this is all free to use. One of the things I wish I was able to show you is the level 2 data. In every stock quote page, we have the level 2 data that allows you to better assess the support and resistance depending on the volume of the buy and sell order that is in the open market. These are all the real-time data from the limit orders, which are yet to be executed. Therefore, having an idea for the buy and sell order, especially the quantity involved and the price point, will help you to better assess, is now a good time? Did it break through the resistance? That maybe, for instance, is a sign that you can buy and expect for some appreciation on the value.
Yeah,
I mean, sorry, on the price.
Yeah, that's great advice there. I think I think we got to a lot of content. We do see a lot of questions in the chat, so maybe on a subsequent webinar, Carolyn, we can get to some of these other questions that we're getting.
Yeah, that's true. Totally. We are running tight on time. This was such a fun and just really cool opportunity to engage with you all. We hope this was helpful. Tweet or like it, and please do subscribe to our YouTube channel. And if you want more of this information, you have suggestions for us to cover future topics, email us. It's marketing@moomoo.com. And our team of marketing department is super excited to help you. And one of our missions really is to help more investors become a better investor. That's what Moomoo is also committed to doing. And we're really grateful working with partners like Benzinga to continue doing more of this education so that we all feel more comfortable. If stock trading is a sport, wouldn't it be better to have more practice and coaching so we become better athletes?
100%. I could not have said it better myself. I had a blast being with you guys today. Thank you to Carolyn and Moomoo for having me. And for everyone out there, please check out benzinga.com. We also have our YouTube channel. You can follow us on Twitter, TikTok, Instagram. We're everywhere. We, like Moomoo, are all about teaching the next generation of investors, empowering them with more data and more news to make investing easier. We strongly believe that investing should not just be for the top 1% richest people, but should be for everyone. And that's what we're trying to do at Benzinga. Again, thank you to the Moomoo team for allowing me to co-host with Carolyn today. Had a great time and look forward to hopefully someday being back with you guys.
Yes, definitely. We'll be back soon enough. Thank you all so much for today's time. If you like it, again, make sure you subscribe to our channel, email us, stay connected. Until next time. Thank you all.